Hi, I'm Victor. Welcome to the Active Value Investor channel. This is a channel where I focus on value investing, but I really want to actively manage my portfolio of stocks. I don't sit on stocks for a long time. I actually analyze them quarterly and either make a decision to buy more shares, hold, or sell. My portfolio year to year changes to some extent, but some of the companies I've held for some time. I'm seeing some trends in 2023, and I wanted to put together a video to share with you from my point of view what I'm seeing, some opportunity, some risk that is out there, and what I'm doing about it to try to beat the S&P. 2023 is off to a really good start, 8.17%. The S&P is doing really well. The NASDAQ is doing even better. Now, if we look at that trend, are we going to stay on an 8% upward trend, which means for the year it would be 96% return? That's pretty much impossible. So I'm beginning to think that we're off to a great start. I'm optimistic this year is going to be okay, especially compared to 2022, which was a very difficult year for stocks. But let's take a look at other years. The S&P over the last 5 years has done well. It's up almost 58%. And you can see with more time, it's easier to see trends, long-term trends, but you can see how at certain points, like at the end of 2019, going into 2020, we saw a significant drop in the S&P. And that was a big surprise. It caught me by surprise. We were going up and then it came down. But then the chart continued, the data continues to follow the overall trend. And obviously with COVID, when it hit, it really frightened a lot of people, and people became very risk averse. So they sold, but then they came back, and it really came back, and it stormed up way above the trend line. Now going into 2022, you can see that stocks really took a hit. And now we're seeing a rise that has begun in 2023. Looking at the 1-year chart, it's down 8%, which is better than if you just measure 2022. 2022, I think the S&P was down 14%. So the rise that we've seen recently has begun to change the 1-year trend. But overall, the 1-year trend is down 8%. I wanted to put the year-to-date chart next to the 5-year trend and kind of show that, the year-to-date probably resembles the long-term chart better than the 1-year chart, which was negative. So I am a believer that the S&P over time will continue to rise. Inflation, all of the factors that drive up stock prices, I believe it'll go up over time. So I believe that, this year we will be probably in positive territory, but no way do I think we're going to continue this trend that has just been a very profitable trend, because then we'd end up more than 96% increase in stock prices for 2023, and that is impossible. I think we're going to see some volatility, and that's what I'm really preparing my plan to take advantage of. The trends that I'm seeing so far in 2023 and my expectations for 2023. So first, stocks were oversold in 2022. I think especially toward the latter half of 2022, just stocks became very undesirable, and there was just a lot of good companies that were oversold, which opened up an opportunity for value investors to buy those really good companies. Higher interest rates became a higher discount rate for models, including my own. So I think valuations really changed. If you looked at a valuation in 2020 compared to 2022, it's very different because interest rates were almost triple the rate that you were using in 2020. So the days of free money are behind us. Earnings so far this year, we've seen some low growth, but the theme is companies are really controlling costs and expenses. They're laying people off. And that really signals to me that the remainder of 2023 is going to be modest. We're not going to see any, humongous profits. For example, I own Chevron. Profits in 2022, and that was an exception. They were incredibly profitable. Not expecting that this year. We saw earnings from Alphabet, moderate growth, good profitability. We saw earnings from Meta, and that was interesting. Meta really showed a slight decrease in overall revenue, increase in users, but they committed to controlling their expenses, and investors love that. So the stock rallied more than 25% over 2 days. Another trend is we're going to have a recession with high employment, which is kind of an interesting, spin on a recession. But we're seeing a slowdown in the purchase of products, but we have a lot of people employed. The employment report that came out yesterday surprised everybody by the number of jobs that were created, and that's all good for people to be employed. I'd rather have that. But we're going to have a recession. I think that prices are too high due to inflation that occurred in 2022. And I think we're going to have a slowdown in the buying of goods and products. The Federal Reserve is going to be committed to driving down inflation until they hit recession. So I think that's going to continue to play out in 2023. I think we're still going to see 2 rate increases because the employment report that came out yesterday was too good and the stock market's rallying too well. So the Federal Reserve, I'm expecting 2 more rate increases of 25 basis points, and that will bring up interest rates a little. Bond yields have gotten far better, and now bonds compete for capital against stocks. I'm buying bonds. Bonds give you a 6 to 8% return. It's far lower risk and volatility than stocks, and it has a place in my portfolio, so I can have really good stability and provides really good cash flow. The S&P will be volatile. I think if I was going to guess for the rest of February will be negative. We've just had too good of a January, and that cannot be sustained. But overall, as we look at the rest of the year, it'll be up and down, and we will end 5 to 10% higher on the S&P this year. And so therefore, we're going to see some significant volatility. My plan for this year is, buy companies at a discount. I think we're going to see some volatility this coming week and the week after. And I want to do analysis on the companies that I own, as well as companies that I have on a watch list, so that I know which companies I want to buy when prices get dropped, when prices get discounted. So I want to have a good plan, and I'm ready to take action once those down days come. I'm going to continue to buy bonds with very good yields. When I first started investing 25 years ago, 30 years ago, it was a time when bonds did have very good returns. Bill Gross would return 8 to 10% with bonds. So it was nice to diversify into bonds in those days because you made good money. And I think we're beginning to see those days again. So here are the companies that I plan to buy additional shares in. I've done the analysis behind each company listed, and I want to know what I believe the company is worth, the intrinsic value per share. And I compare that to the price that the company is being traded at. I have those 2 columns compared, and I really value dividends. So I have a premium on dividend companies. And then I have an intrinsic value per share compared to the current prices. And then I'm able to quickly look at a day, especially a down day, that stocks are hit more than, go down more than 1%, maybe even 2%. I think we're going to see some days like that. Really look at trends where, when can I buy these companies at a discount? So I'm ready to take action. So that's my list. if you want me to analyze any particular one of these, I've analyzed most of them and have put them on my channel. But if you had a question on one, let's collaborate. Let's help investor to investor and see how we can outperform the S&P 500 together. Thanks for watching the video. I appreciate it. I hope you found some value out of it. I really appreciate the comments that people have put in the videos that I've recorded, and would appreciate more comments to come up with other videos that you think would be interesting. Thanks again for watching. Good luck investing in 2023.